The broadcast is now starting. All attendees are in listen-only mode.
All right, thank you, everyone. Let me shut that down. Do a few tweaks here. Okay, let's get the question box in front of me so I can see that. Okay, audio is good. Okay, let's do this. Today it's February 28th, Thursday. It's about 1:45 Chicago time. Usually I'll kickstart this off at 1 o'clock, but as a registered person, I have to go over some of the disclaimers before I start broadcasting and getting into the webinar. So what I thought is I would start early because it's real quiet at the desk here and go over the disclaimers, probably take 5 or 10 minutes, and then I'll break it down into the trade setup, and then we'll get into a live market setting where we'll look for this setup, what you're seeing in front of you, in a live market environment. And the goal is to identify them, go inside the DOM, enter the trade, manage the trade, and exit it. And then we'll review what we did, win, lose, or draw. Okay? Throughout the program, I'm going to make some observations, things to look for, traps to stay out of. Some of the things that I get hit, questions I get hit with a lot. If someone's struggling, some of the big things that kind of pop up. So I'll make observations like that. Okay. If you are brand new to CFRN, maybe you're just thinking about it. You're on the trial, day 1, day 2. This is going to be a good syllabus for you to lean on. Okay. I'm going to go over the trade setup in slow motion, and then we're going to go in live environment and execute it. Okay. Ask questions. Okay. That's what this is all about. More of an eyes wide open approach where if you don't understand something, say, hey, pull the car over. Let's talk about it, and we'll address any questions you have. Okay. If you're already a CFRN member and you're hanging out, that's fine. Good stuff. This is more screen time for you. This gets you in the place where you're going to learn some of the personalities of the markets that we're trading. Again, as Michael said this morning, there's some things that I can explain differently than Michael does. I'm going to slow it down. And again, for you guys, ask questions. All right. The whole idea is really, in the end, to get you to a place where you're comfortable and confident. Okay, to push the buttons. Okay, so that's the goal. So with that being said, let me start with what I have to talk about first, which is the disclaimers. Okay, now, as I said before, I really don't like to throw these up in front of you and say take a few minutes to read them and then throw them back down. I'm going to take about 5 minutes to talk about it because I do think it's important. I've been doing this for almost 25 years, and I really have seen the good, the bad, and the ugly when it comes to trading futures. Okay, so the disclaimer, you see it, it's highlighted, it's circled. Okay, basically, it's out there to scare those guys that are really new to our trading space. Okay, basically, it says you can lose everything and some in your trading account if you aren't doing some of the basic things, which are using stop losses, don't have a trading plan, you're not watching over the markets, you're not looking over the account, you're maybe turning your back on any news items, you're just turning your back to just things in general. Okay, you have to be engaged in what's going on. Okay, if you're not doing those things, the disclaimer is going to hit you right smack dab in the face. Okay, the good thing, and we're going to go over this in a few minutes, is when you go down the CFRN path, you are going to have a trading plan, right? Basically, 4 simple rules. I'm going to go over the rules, and we'll really talk about those. Okay. You'll have a set of rules. As it says here, every trade has a stop loss attached to it. Okay. You're on a 4-tick range chart, right? So you really have to be engaged in what's going on in the marketplace. All right. So you're going to be paying attention to the market. You're going to be conscious of any news items. You're going to be in front of the screens, in front of a platform. So if the market or any news does come out and affect the market, you're in a position to take action. Okay? So, as the disclaimer says, hey, you can lose everything and some if you're not using stops and not having, not watching your trading account and stuff. You go down a CFRN path, that's going to water that down a little bit because you have to be actively engaged in what's going on. They also use aggressive risk management, all right, and it's rules-based. So we really just can't walk away from it, okay? So again, the disclaimer is out there really to scare the new guys that are just getting into our space. The other thing too is that the funds that you put in your trading account should be risk capital. Could be funds that you can afford to lose. That's not going to change your lifestyle. Okay, so that's the second part. That's important of that disclaimer. Usually, most of the guys, when they get to CFRN, they're taking the trial. They're numb to this. All right. They've been to this guy and this system and that system. So they've been around. Okay. So they're pretty numb to this disclaimer. Okay. They've been beat up. All right. So they kind of get it. All right. So again, I don't really like to take this lightly. That's why, again, I don't like to throw the disclaimer up and say, hey, take a few minutes because, it is important because there is risk involved. Okay. In the end, all right, and this is the last part of this, if you're doing all the right things, okay, which is I use a stop loss. I'm in front of the market. I'm in front of this DOM. Okay, I'm aware of the reports and the news items and all that stuff. In the end, if the market does something screwy, all right, there is a chance that the market could hop over your stop, okay, leaving you with unlimited risk in the marketplace, okay? That is, again, that's kind of like a black swan event. I've only seen it a few times happen, but they do. The good thing is, if you're with CFRN, you're going to be in, like I said, in front of the screens. And if that happens, at least you'll be in front of a DOM. That's this tower that I'm circling here and highlighting. Okay, we buy in the green if we want the market to go up, and we sell in the red. We click in the red if we want the market to go down. Okay, but if all fails, all right, and something happens and you're kind of stuck in the marketplace and the market's jumped over your stop for whatever reason, at least you're in front of this hotkey here where you can exit at market and cancel. Okay? So, long-winded explanation of the disclaimer. I wanted to highlight it because I do think it's important. All right, let's talk about disclaimer number 2, and then that'll wrap the compliance part of the program. My relationship with CFRN. No, I do not work for CFRN. CFRN doesn't work for Daniels Trading. Okay? There is a line in between. Okay? Basically, the indicators that CFRN has, they are built inside the platform. The platform you see in front of you is DtPro. Okay? If you're brand new, this is their indicator set at work. Okay? I support the platform, execution, the brokerage. If you have problems downloading the platform, if you have problems downloading the indicators, if you have questions about the trade setups, you would talk to me directly. Okay. If you decide to go down the CFRN path and You said, hey, I wanna be a member. Any funds that exchange, pass back and forth, that's between you and them. Okay, there's nothing that gets. You don't go through me. The contact is directly to them. Okay, they're responsible for the videos, the member area, Logic 247, daily double, concierge, trade alerts, all that stuff. You'd reach out to them directly. Okay, again, it's their indicators, it's their property. Okay, and it's just built inside the platform. Okay, now I'm in the room every single morning, right? I know the setup. I've been in there from day one. So that's why I do the 1 hour bit on Thursdays, because there was a demand for people to say, hey, you know what? Slow things down. Someone please explain to me what's going on. And so I raised my hand and said, you know what? Let's do this, because there is, a lot of people have the same questions. So why not knock it out every week for an hour? Okay. And if I could stress on some of the things and the pitfalls that people, the traps that people fall into, maybe we could tip the scales a little bit. Okay. So that was the objective of the CFRN Thursday. Okay. Is to get you guys up to speed and get you going and answer any questions. Okay. So that is my relationship with CFRN. Okay. Basically, they're the third-party indicator software. It's their trading tools. Okay, they're the educator. Yes, the indicators are available on DtPro. The platform is free. All you do is you pay for the data. Okay, they are also available on Ninja. Okay, a lot of people will gravitate toward me because, well, frankly, I'll spoil you if you ask questions. I know the setup. I know the platform. It's nice to be able to call the trade desk and get a live body on the phone. We could do one-on-one screen shares. If you have questions about the setups, that's going to be available to you also. So there's a lot of pluses. Okay. So, that covers it for that part of the disclaimer. Okay. So I went over two. So now we're just going to get into the trade setup. I couldn't find my screenshot, so I'm going to work off of this template for now until I figure out where that screenshot is, so I can mark it up a little clearer. All right. Let me get my marker out, and we'll go from here. All right. First order of business is the time frame. We are on a 4-tick range chart. All right. So if you're brand new, what does that mean to you, and how do I get there? Chances are you're on a daily, you might be on an hourly, you might be on a 5-minute chart. Okay. The idea is to get that chart whittled down to a 4-tick range chart. So what you want to do, where it says 5 minutes here, the time frame, just hit the drop down box and go down to custom and look for range bar. Check the circle and make that one look like a 4. Okay, just select OK. This is the ES chart on a 4-tick range. Okay, the other tip off is it'll say 4 ticks, but the R will be in parentheses. Okay. Biggest trap that people fall into is they'll select this tick bar. They'll make that 2 look like a 4, and the chart looks something goofy like this. All right. So if you're staring at this, you fell into the first second trap. So it's time to get on the 4-tick range chart. Okay. It's a range bar, so that means the height of each candle is 4 ticks in height. Okay. Some look bigger and smaller, but in the end, they're all the same height. Okay. Now, here's what you'll hear in the training room. You're going to hear Michael rattle off, talk about the highs and the lows of each bar. Okay. Especially if we get close to a trend line or, the BBC. Okay. He's rattling off the highs and lows because he's going to be a little bit proactive and predictive and place an order above and below the current market price. Okay? He's going to be buying it above it. He'll be buying it on the stop above the current market price. And here's the market price at $27.91. Or he'll be selling it below. And the reason he's doing that, because if he knows the height of each candle is going to be 4 ticks, if the next candle is going to print, it's going to have to go print a 5th tick, right? It's going to have to print another tick to create that second bar, okay? So basically, if the market takes off or breaks down, he's going to be in a position to take advantage of it on the way up or down, okay, if it qualifies, if it matches the rules, okay? So when you hear him talking about, hey, if the high is this, then the low should be this, he's preparing himself to buy it or sell it on a stop, okay? He's going to be entering it above or below the market price, okay? So that's what he's doing. Now, it's a tricky thing, and it takes some time to do it. I think if you're in the infancy stage or you're just starting to learn this stuff, I wouldn't bother with that so much. Just get in the habit of knowing what the trade setup is. Does it qualify? And in the beginning, what I would do is I would end up left-clicking in the green if you're going to get long, or left-clicking in the red if you're going to get short, and just create limit orders, okay? But, you know, what Michael is doing in the room is a little bit more advanced. He does it a lot, so, you know, I wanted to bring it to your attention because that's what's going on, all right? So we're on a 4-tick range chart in the room, okay? So that's the first order of business. Get on the time frame. And it doesn't matter what market you're trading. It's always going to be on a 4-tick range. The only time it might change is if you're trading a market that's, you know, really moving around. So right now, the YM, the NASDAQ, the Mini Russell, those markets, what you might consider is going to an 8-tick range chart. So what you would end up doing is selecting custom and changing that 4 to look like an 8. The setup is still the same. The only difference is the risk, okay? It's not 8 ticks, now it's 16 ticks, all right? But all the rules are the same, and we're going to go over those rules now, okay? Nothing's changed but the risk, okay? But for now, we're going to stick into those markets that are in slow motion, so we can use the 4-tick range chart. All right, time frame. Check. The first step is the bullish or bearish cross. All right, so some buzzwords here. This red and blue line is referred to as the MA1. Okay. The green line is referred to as the BBC. That is short for bullish bearish cross. Okay. Together make or create step number 1, which is this. When the MA1 crosses the BBC and the MA1 is red, you're looking for selling opportunities. That's a bearish cross. If the MA1 is crossing the BBC and it's blue, that is a bullish cross and you're looking for bullish opportunities. Okay? The one that is highlighted here by this red arrow is a bearish cross. Why is it? Because the MA1 is red. Okay, it's right there. So what you're doing is at this point, you're going to be looking for selling opportunities. Okay. Note, I didn't say go short, go long, go short. I said you're looking for shorting opportunities because that's going to lead us into step number 2, which is this. The normal thing after the cross, okay, and we identified the cross as being the MA1 crossing the BBC. The normal thing for the market to do is to gravitate toward that green line or the BBC. That's what you're looking for the market to do. Okay. Not only are you looking for the touch, but then you're looking for the close in the direction of the trend. We identified the trend as being bearish because there was a bearish cross. The MA1 is red, so now you're looking for a down close or a red candle. Okay? You're looking for a down close and a red candle. If it was a bullish cross, we know the MA1 should be blue. All right? The normal thing for the market to do would be to gravitate toward the BBC, but then you would be looking for a blue candle or a green candle, something positive in the direction of the trend. Okay? The one that's highlighted is that bearish close. So in the end, what you're going to learn here in a few minutes, ideally, we want everything to be the same color. Okay? Now, step 2 is in place, right? We had the down close at the normal place for the market to stop, which was that green line. Okay? Now our eyes are focused on the oscillator portion of the chart, and that's called the slingshot. Okay? And that is going to lead us into step number 3. Okay? Which is this. Step 3 is that we're looking for separation or divergence. You're going to hear Michael talk about this in the training room, separation or divergence. Okay, so what is that? Okay, let me define some little variables here in the slingshot. Okay, so another buzzword, that red and blue line inside the slingshot is referred to as a cycle, and that green line pulling away is referred to as just the green line. There's nothing special about it. But together, okay, the space in between here, that is the separation or the divergence that Michael is referring to. Okay? And let's break that down, because here's what this is telling us inside the slingshot. The market, the cycle is red. Okay? It's pointing down, so it's suggesting in the NASDAQ on the 4-tick range chart, the market is going lower. Okay? Step 1, the bearish cross, together with this price action here, which is the normal thing. Pull back to the BBC and close in the direction of the trend. This is telling us, hey, this little price action up here and the green line pulling away is saying this is just an air pocket in this ongoing downtrend. Okay, that's what it's suggesting. So when we're faced with this, okay, the normal thing and this separation, okay, the next thing you're going to do is go inside the DOM or the tower and left click and take action. Okay, because here's what you expect to happen in the end. And the trade exists down here. Okay, it all happens down here. What you expect to happen is ultimately this green line is going to come down and close the gap and meet the cycle. And in doing so, the price is going to make a new pivot low. This is the area you're going to get out, right here. So that's a big question. Hey, when do you get out of it? When do you get out of your trades? It's right here. Okay? It's right there. All right? So this is setting the tone. Hey, we're in a bear market. This price action correlates with this movement in the green line. The down close says, hey, this is just an air pocket on this down bearish trend. Let's get short. Okay, you would get short. We would expect the normal thing for the market to do, which is the green line, get into the cycle. And in doing so, the market makes a new pivot low. It's at this point we get out of it. We get out of the trade. Okay? And so what we expect to happen is, okay, and this is why I say the trade exists down in the slingshot. It's because we expect the green line to pull away from the cycle, close the gap. Pull away, close the gap. Pull away, close the gap until, look, the cycle turns blue. So you're thinking bullish opportunities. And now you're looking for the green line to get below it. and create bullish separation, all right, and close the gap. And in doing so, what the market should be doing is trending, okay, making lower lows or higher highs. And you're going to hear me hammer that away in the next 45 minutes, okay? And in the end, what you're going to end up doing is selling that air pocket, selling that air pocket, selling this one, and then buying this dip and buying this dip, as long as we're trending, okay? That's the game plan. All right, so that's why we want everything to be the same color. We got a red MA1, we got a red candle here, and we have a red cycle. Man, there's nothing else to filter out. Everything is stacked up in our favor. Okay, it's time to take action. Okay, when the cycle starts turning color on you, there's a new set of rules, and we're going to go over that. Okay, but that also waters down the probability. Okay, in the end, every trade has an 8-tick stop attached to it. So if you're dead wrong, if you're trading the crude or the gold, you're risking $80 per contract. If you're trading the beans or the S&P, it's closer to 100. If you're trading the mini Dow, it's closer to $40. Okay, every trade has a stop loss attached to it. Okay, in the end, okay, if this is day one and you're wondering what CFRN is all about, you're not going to learn to pick the top and you're not going to learn to pick the bottom and trade it from point A to point Z. You are going to take a piece out of the middle. That's what you're learning. And once you get into the trade, you're going to trail a stop, trail the stop, trail the stop, trail a stop, until what? The cycle gets, the green line gets into the cycle, and you cut it loose. And then you look for that the next air pocket. Okay, that's what you're signing up for. You're signing up to scalp. So that means you're going to have to be in front of the markets, gauge what's going on. You're going to have to be efficient with the trading platform. You're going to have to really know how to use the DOM. So that's what the demo is for. Okay. So you're going to have to spend some time in front of the screens because we're looking at the market under a microscope, right? So that's something you just really can't buy or sell and then walk away. Okay. You have to be in front of the screens. Okay. Because there is some aggressive risk management, and we'll talk about that if and when we get into a trade here. Okay. So that's the game plan. That's the rule set. Okay. That's what we're going to look for in a live market. And then we're going to pop inside the DOM here. This is the DOM, the depth of market, this tower. This is where we buy, left click in the green, and this is where we sell. You left click in the red. Okay, that's what we're going to do. Okay. All right, so here we go. Again, questions, throw them in the question box, and then we'll attack them as they pop up, okay? All right, so if you got a piece of paper in front of you, the first thing you should be writing down. Rule number 1, the market should be trending before you push any buttons. Okay, we should be making some higher highs or lower lows. Okay, so let's take a look. This is the ES, S&P 500. Okay, one of the biggest habits I want you to get into, this is what I want you to practice, is hitting the zoom out button to determine whether we're trending or not. Okay, because when you're inside the training room, you're looking at Michael's charts and they're blown up pretty good, right? And they're in columns. So you really don't see the entire landscape of the market, okay? I'm not asking you to go to a 15-minute or a 30-minute or a 5-minute. Just hit this red magnifying glass and zoom out, okay? Now, when I look at the ES, you might say, hey, we're making some lower lows here, okay? They're shallow lows, okay? But look at, we have support here, right? This old low here. So for me, I'm looking at the ES, and I'm going to tell you it's trading sideways. All right. I wouldn't take any action in this market until we start breaking some of this little sideways action. Okay. So again, that number 1 rule, are we trending? And the ES, no. And you notice the first thing I did was I zoomed out. Now, if you're not sure about is it trending or not, the dynamic support and resistance dots will be a pretty good clue. Notice how they're side by side here. Okay, they're side by side like that. Okay, there's no trades. Okay, that means they're sideways. See, next to each other, they look like a set of choo-choo tracks. That's, you have no business being in there. Okay, so that's a good indicator to have if you're confused whether or not we're trending. If you have any doubt if we're trending, then don't push the button. Period. Okay, you're on a 4-tick range chart. You got about a dozen markets you can be looking at. Okay, when in doubt, just stay out. Okay, it has to be easy and obvious. If you want to write that on a piece of paper, it has to be easy and obvious. Do it. Okay. All right. That's the ES. We'll go to the Dow. Notice the first thing I do, zoom out. Okay. Now before, the Dow was trading sideways. Okay. Notice how we had some resistance and support. Old top here, and old bottom here, old bottom here, and old top. Okay, that's a little bit of sideways action to me. The current action, come on. Okay, we actually broke that level of support, right? So in the Dow, okay, I'd be interested in getting short. Okay. Now let's point this out while I'm staring at it. Okay. Here's the setup. Okay. Ignoring trend. Okay. The bearish cross, the MA1 is red, and crossing the BBC. That's step number 1, right? What's the normal thing for the market to do? Pull back to the green line, right? It does, doesn't it? After the cross, it pulls back to the BBC, and you're looking for the down close. That close is step number 2. Okay? Do we have separation? Our eyes gravitate toward the slingshot. We have a red cycle. That's good for the home team if we're looking for shorts. And the green line's pulling away. Okay? We have the separation, right? This is it right here. When we get into a trade, what do we expect the market to do? Well, we expect the green line to get into the cycle. It does it. And what should the market do? Make a new pivot low, right? This is our exit right here. Okay, at this point. All right. That had all the ingredients, okay, that you look for. Okay, the only thing I would say is if you zoom out, we had some support there. All right. So if I were faced with that, I wouldn't have taken it. Yep, opportunity lost. All right. But that's a problem. All right. So we are making a lower low, right? So we did break out of that trade, that little trend sideways action. Okay. So again, the market is doing what? The normal thing. Pull back to the BBC. All right. So now what we would do is we would start looking for another down close. All right. Now a few things has happened here. That has happened, right? The cycle isn't easy and obvious. It's not red. It's now turned blue. Okay. So here's what you're going to do. After the cross, okay, that's your cross, right? What you're going to do is you're going to get in the habit of activating this trend line right here, okay? Because after the cross, you're getting the habit of drawing a trend line, okay? Drawing a trend line. And you're going to do this for 2 reasons, okay? Number 1, if the market has so much bearish or bullish momentum, it won't get to this BBC. It won't do the normal thing, okay? It'll make an attempt at it and then break the trend line and go in the direction of the trend. If you get in the habit of drawing a trend line in advance, and we do break the trend line, you're in a position to just hop inside the DOM here and take action. So after the cross, you have to get in the habit of engaging that trend line and drawing trend lines, okay? The other reason you have to do that, draw a trend line, because when you draw it, okay, when you get in that habit of drawing it, at some point, that cycle might turn color on you, right? Turns color on you. Number one, if it does turn color on you, a trend line is required. So if you get in the habit of drawing it ahead of time, you're already one step ahead. Okay, you're already there. Okay, you're not at the last minute fumbling around trying to draw a trend line. Okay, it's already in place. So again, you're in a position to take action. Okay. Also note that if that cycle turns blue on you, okay, you're also watering down the probabilities. Okay. Now it's not so easy and obvious. So circle that. Okay, it's not so easy and obvious. Okay. All right. So the trend line is drawn and we get a close below the trend line, right? That would qualify as a short. Okay. Now, let me point this out. And it'll probably happen here sooner than later again. At some point, when that cycle turns color on you, at some point it might start curling up, okay, and start curling up at a 45-degree angle, okay? If you're faced with that and get involved in that, that's a disqualifier, okay? You're not going to take any trades, okay? So right now, we had the close below the trend line. The cycle was blue, okay? However, the cycle was starting to tilt up a little bit, right? Okay. Okay. Could you have taken this? Yes. The end result, a break even. Okay. In the end. But the fact is, we're starting to curl up here, and that's suggesting that the market is going to go up. Okay. Now we'll see a few more of those, and I'm going to make a point of that. Okay. So again, easy and obvious. Everything's the same color. If it turns blue on you, trend line's required. And if it starts curling up at a 45-degree angle, no trade. Okay? Good point. Melvis's point is, and this was going to be my last point on this, at what point does the 45-degree line take effect? Is it 33 degrees, 34? Here's the answer to this. Okay? Should start at the corner of the square if you want to be really technical about it. But here's what I would do. Oh, okay. Here's the point. If you have to ask yourself that question, is it, yeah, it's not quite 45. It might be 25, 30, 20%. Don't take the trade. Okay? Again, easy and obvious. Okay? That would be my suggestion. But if you're asking, it starts at the corner of the squares. Okay? These little squares. Okay? That's where it starts. But again, keep it simple. If it's not flat and it starts curling up a little bit, better easy and obvious. I would write that down on a piece of paper. Okay. All right. Let's move on. Let's go to the gold. Okay. I move to the gold. Notice the first thing I do, are we trending, right? And notice the first thing I do is I zoom out. Okay. What I see here in the gold right now is the market really trading sideways. Okay. I'm looking at the support and resistance dots side by side. You might say, hey, however, we are making some lower lows, but they're shallow lows. Okay. We're not really, doesn't have a lot of momentum. Okay. So right now, no, there's nothing going on in the gold. All right. So I would just stand at parade rest with the gold right now. Okay. Don't do anything there. Let's go to crude oil, GCL, and you should be on the J contract. Okay. So notice the thing. First thing I do, zoom out. Okay. What I see here, support and resistance dots side by side, along with resistance point. Hey, I poked our head above it a little bit there, but I see a little bit of sideways action. This action broke that sideways trend. So I would be looking, again, with the break here, I would have been looking for a pullback to the BBC. Okay, that's what I would be doing. Okay, this is a good reason. Few things goes on here. Number one, we identify there's a trend. The trend is lower. Normal thing for the market to do, gravitate toward the BBC. In the process, you're going to draw a trend line, right? We draw the trend line for two reasons. We don't know if it'll get to the BBC. And number two, if the cycle turns color on us, which it does, right? The trend line is required. This is why you don't just simply place an order here. Okay, you wait for the down close. You sacrifice a little price action for price, okay? Because at this point, that's your first down close, right? Your first red candle in this downtrend. Look at the color of the cycle. It's blue. That's not good. But number two, now it's got that 45-degree angle, okay? What it's suggesting is that crude should actually start working its way up, okay? It's going down now, but a lot of times it means this or we're going to go up, okay? So you're going to, yes, it is, Ben. It's recorded. It's going to keep you out of some bad trades, okay? So again, if this turns color on you, you got to note, waters down the probability, but two, if she starts curling up, no trade, okay? The other thing you should note here too, is see the black step line at the point in which we get the red candle. It's also pierced the BBC. That's also a disqualifier, all right? So I just basically went over 3 disqualifiers that you'll be faced with, okay? Number one, if we're trading sideways, okay, that's disqualifier number one. Number two, if the cycle turns blue and it starts curling up on you at a 45-degree angle, that's disqualifier number two. And the third one, okay, is that black step line piercing the BBC. That's disqualifier number 3, okay? Usually these two guys will hang out together, okay? You'll be faced with both of those at the same time, okay? So we just did a webinar on disqualifiers, okay? So that's why, okay, you have to be, the biggest one is if people get into a bad trade, it's usually because they noted they did everything right. They drew the trend line and they had a down close, but the cycle turned up against them, and usually that's a big thing. Okay, that's where they'll lose their dough. Okay, they'll get stopped out of the trade because they ignored the slope of the cycle. It was blue and turning a different color. Okay, that's one of the biggest traps. The other big trap is people don't know how to identify if a market's trending. Okay, and they get caught up in a sideways market, and they're stuck. All right, hold on. That's my phone buzzing, so stand by. I'm going to hit the mute button. All right, so I'm back. All right, so that's the crude. So we'll move on, okay? Let's go to natural gas. All right. First question on our piece of paper, are we trending? Zoom out. Get in the habit of doing that. We have some higher highs here. Okay, that seems to be okay. Again, what are we seeing here? The market's doing the normal thing, which was pull back to the BBC. Okay. Note that we haven't made a higher high here. Okay, so that means we're not trending. We stopped. And note the cycle here's our up close, our first one. And notice how this looks like it's falling off a cliff. Okay, it's the wrong color. Okay, we want blue. We want this. We don't want red. And we certainly don't want it tilting over like this at a 45-degree angle. All right. Again, black step line is also broken the BBC. Normally these two, okay, hang out together. No trade in the natural gas right now. Okay, let's move on. Let's go to a currency. Let's go to the euro currency. Number one, are we trending? Notice the first thing I do is zoom out. Here's a good example of what I was talking. There's a few good examples right here. This, you would be, sometimes you get faced with this inside the room, okay? You see a big picture of what's going on. This is why you get in the habit of zooming out, okay? A few clicks, and what you see is, hey, we're bumping our head against old resistance here, okay? So this is not a surprise that the market is doing what it's doing off of this old top. So the question is, are we trending? No, we're not. We're not trending. Okay, here's another good example. Okay, again, I'm just going to ignore trend action. Why we get in the habit of drawing a trend line. We have the bullish cross here. The MA1 is blue and crossing the BBC, right? So we're thinking get long. The normal thing after the cross, right, is for the market to gravitate toward the BBC or this green line, right? Again, a good habit to get into after the cross, activate the trend line. Because as we start trending toward or gravitating toward that BBC, we never know if it'll get back there. Here's an example, it doesn't. All right. Do we have the bullish separation? Well, we got a blue cycle. That's good. And the green line is pulling away. All right. The market ultimately closed above the trend line. All right. And moved. Okay. So again, two good habits to get into. Number one, hitting the zoom out button to see if we're trending. And then number two is after the cross, okay, after a cross, the MA1 cross and the BBC, you activate the trend line because you're going to get in the habit of drawing a trend line. Okay. All right, let's move on to, I don't know, I pulled up the British pound. Okay. This one is an easy and obvious one that we're trending. Okay. Making lower lows. Okay. Start making some lower lows. Okay. We're trending, so we check that off our piece of paper, right? We got a bearish cross, so we activate the trend line. The normal thing for the market to do is gravitate toward the BBC. Okay. Do we get a touch? Nope. Do we get a close below the trend line? Yes. Is the trend line required? Yes. Why? The cycle is blue. Okay. Notice the action that happened afterwards. Blue, watering down the probabilities, start curling up. And what did the market do? If you took this trade, the result was, again, a break even. And two, it gave you grief. You know, we were trading back and forth. Okay. So again, keep an eye on the cycle. Trend lines are important too. All right, so let's trying to find something we can sink our teeth in here. S&P, back to the S&P. Zoom out, zoom out, zoom out. We're still sideways. We're still holding support here. Okay? There's nothing going on. All right, let's go back to... All right, so here's the crude again. All right. Are we trending? 1, 2. We got resistance here. Okay? So here, let's do this, though. I want to show something. I want to show some action in the DOM. Okay? So, let's try. If we get a pullback to the BBC, I'm going to pop inside the DOM and put a trade on. Okay? I'm going to show you how to do that. So, I don't want you to touch anything on your platform. I just want you to watch, okay? Because right now we are not trending. Okay, we got some old resistance we have to deal with. Okay, so let's see if this crude oil pulls back so we can fiddle around with the DOM. Okay, the DOM, if you're brand new, it's this tower here. Okay, this thing here is where we do our buying and selling. Okay, that's what Michael does. Okay, I'm going to switch guns. No, nothing. All right, so we'll look at the crude oil. All right, the DOM. Okay, we left click in the green area. Okay, we make money if the market goes up. If we left click in the red, we make money if the market goes down. Okay, that's the execution part of the DOM. Okay, now let's take it one step further. See this Tinker Toy triangle up here? And when you put your mouse over, it says bracket options. Left click on it and notice how the bottom of the DOM opens up. Okay, what I want you to do, okay, is check the box that says sell stop and check the box that says buy stop. Okay. Not only that, what I want you to do then is to right click over the buy stop and put factor in ticks. Sell stop, factor in ticks, and make the factor an 8. Because what that's going to do from this point on, as soon as we enter the market, it's going to put an 8 tick stop right behind it. It's called the bracket order. Michael has it set up the same way. Okay? So that's the one less button you have to press. Okay? So when you get into the market, it's also going to release a stop loss 8 ticks away. Okay? All right. So that's how your DOM should be set up. Do you check the sell limit? Do you check the buy limit? Those are associated with target prices. No, you don't. What Michael does is he trails the stop, trails the stop, trails the stop. Okay, until at some point you just get out of it or you get stopped out of the trade. Okay, that's the game plan. Could you put a target in? Yeah, down the road you could do that. Okay, but for the time being, to keep it simple, no, you're just going to use the stop loss function. Okay, and I'm going to show you how to drag it up, drag it up, drag it up. I just need the screw to come down. Okay, so again, we're bumping up our head against resistance over here. That's why I'm telling you, keep your hands off the DOM and just watch. Okay, so let's see if it pulls back. If it does, I'm going to show you how to draw the trend line that's associated with this. Okay. All right. In the meantime, I have to cancel an S&P stop for somebody, so stand by. Oh, let's see here. Top day orders. Cancel. All right. Order canceled. All right. Of course, the crude oil is not going to pull back when I want it to. So hold on. Let's go fishing somewhere else, possibly. One second. I'm just changing the different markers to find something to sink our teeth in here, okay? So hold on. This is when you know the market's trading sideways. There's no action. Okay, everything's just sideways, which is a good thing because you should not be touching the DOM. Let's do the euro. Okay. All right. So here's what I did. I just left click. I just changed the chart to the euro currency. Okay. I did that for a couple reasons. Number one, I left clicked in the red. Okay, and we created a shorting opportunity right here. Okay. Few things here. See this area here? that lets you know that you're short at this price. Notice here on the top of the DOM, it'll display that where you're short from. I'm short 1 from 113.94 and a half. Okay. If your P&L is moving, that's also a good indication. Hey, I'm in the market. Okay. The other thing, notice on the chart, and also telling you, hey, I'm short. This red dotted line, letting you know I'm short. All right. There's that trailing stop I was talking about. Notice I had sell stop and buy stop. All right, checked off. All right, so as soon as I got in, it put a stop in 8 ticks away. Okay. So that's our stop loss. Now, what is the rule set? Okay. The money management rule is this. If the market goes plus 4 ticks in our favor or closes on the other side of the MA1, we know the MA1, that buzzword is this red and blue line. A close on the other side of the MA1, we will move our stop to break even. Break even, okay, if you're brand new, is our entry. Okay. So again, let's break it down. I decide to get into a trade. What are the risk management rules? Plus 4 ticks in our favor, or a close above or below the MA1. Okay. If we close below the MA1, this blue line, we will move our stop down. Okay. How do we move the stop down? Okay. We identified this as being the stop, right? It's 8 ticks away because we created a bracket. Okay. All you have to do is left click over that number 1, hold the mouse down, drag it, and release. Left click on it, drag it, release. That's how you're going to move the stop. Okay. That's the game plan. Okay. So again, to get short, left click in the red. Okay. If the bracket is placed properly, the stop will be right behind it, 8 ticks away. Okay. If you want to get long, you're going to left click in the green. Okay. All right. So that's how you do it. Okay. Now, I just did it. I did this just to show you how to push some buttons on the DOM. Okay. We had the bearish cross here. We're certainly not trending, right? We had the pullback to the BBC. That BBC is the green line here, right? That close there, that close there would have been a qualified. That would have qualified. The cycle is red, all right, and you have the green separation. So it had some of the variables. That's why I just chose to pick this one. But we're not trending, right? So you shouldn't be surprised we're getting grief on this trade. Why? Okay. You shouldn't be surprised because we're not making higher highs or lower lows. We're stuck in the middle. All right. All right. The purpose of this, again, just to show you how to enter the trade, how to put a stop in, talk about some of the money management rules, okay, and show you how to drag the stop back and forth. Left click over it, drag it, release it. Now, emergency pops up. I need to get out of the market ASAP. What is the quickest way to get out? Okay, it's this button here. Exit at market and cancel. Okay, that'll get you out of the trade, but it also cancels any outstanding orders in this particular market. Okay, this hotkey here, exit at market and cancel. All right, let's see what the S&P is doing here. Okay, we are making some lower lows. Okay, see if we get a pullback to the BBC. Okay, the color is wrong, right? So that would water any kind of probability on this trade. Okay, there doesn't seem to be a lot of energy in the indices today. All right. So knowing the personality and, you know, a little bit of experience of what's going on, I'm not a big fan of buying or selling anything right now in the ES. Okay. But in any event, if it pulls back to the BBC, we'll see if it qualifies. All right. So I'll come back to this. Okay. Let's find something else that looks easy and obvious. Going back to the crude oil. Okay. Again, are we trending? Okay. It looks like we're trading next to a trading zone too. Again, we have resistance here. So right now, until we really take this area out, I would not be interested in trading the crude. Okay. You might say, hey, but we had the bullish cross here, and we had the pullback to the BBC when we had the up close, and we had bullish separation. Yeah, we did. There was another attempt here. We had a blue cycle and bullish separation. Well, that's true. Okay. But again, look how lazy we were here. You would have been stopped out of break even a few times. Okay. To keep it real. Natural gas just isn't doing anything, so we'll table that. Man, there really isn't much to sink our teeth in here. All right, let's try something else here. I'll go to the yen. Again, notice the first thing I do, zoom out. Okay, we're sideways. Okay, we had old support here. We're finding support at the same level. Something to keep an eye on. Okay, you might get excited about this close here. Okay, or this close here, but look how we came right back, found it, found support. Looked like we were making some lower lows, but that next bar really trumped it and got it right back in that support level. So I don't know how to explain it, but support is here. If she doesn't spend time under here, I don't want it to poke its head underneath it and pop back into the range. I want it to spend some time down here. Okay, might be 3 or 4 bars. Okay, poking its head underneath and then coming back doesn't constitute a market that's trending. Okay, man, Dwayne is lighting it up here on the trade alerts. All right, so that's the yen. Again, the euro, not doing anything. Pound, not doing anything. The Swiss franc, not doing anything. The Canadian, well, that surely looks like it's trending, so it has that going for it. The Mexican peso, okay, it's trending. It's going lower lows, so we got to be excited about that. The Aussie dollar, same thing. All right, let's go. Let's try the NASDAQ. Let's see what's going on there. NASDAQ's a mess. All right. So we're finding that a lot of the markets right now are sideways, right? Let me point this out. You can, if you're interested in larger time frames, you can trade these on larger, instead of taking the scalps, if you're interested in like swing trades or buy and hold or sell and hold type of trades, position trades, you can use the same indicator set, okay? I'll show you something that's interesting that's happening in the crude right now, okay? Daily crude, right? Go to the weekly crude, okay? What's interesting about crude at this point in time, well, number one, the BBC really does act as support or resistance, right? Okay. First time in a while we had a bearish cross. What's the normal thing for the market to do? Well, gravitate toward the BBC. All right. I would say, if the crude starts breaking this level, okay, we have a bearish close on a weekly scale, crude could come down again. All right. So if you want to use the indicator set on larger time frames, it's the same setup. Okay. Here's another observation. The support and resistance dots on daily basis, these time frames daily can also act as buy and sell points. Okay. So don't discount that on a larger time frame. Okay. Now, 1 second here. All right. So again, you like larger time frames, don't discount it. Same rules apply. I would say if you're on a daily scale, you might want to take a look at the support and resistance dots. They can also act as entry points too. Okay. I would say here, this is let's go to May beans. Notice how beans have found support at dynamic support here. The fact that we're closing below dynamic support, right, is going to give you a clue that beans might start falling. Okay, not only that, if I look at soybeans on a larger time frame and draw a nice, just simple trend line off of the dailies, okay, notice how we poke our head up below it but find a way to close back above it. Well, now that doesn't surprise me that we had dynamic support printing at the trend line, but now we closed underneath it and support. I expect beans to come down here. Okay, so because there's not much going on here on this 4-tick range chart, I pointed some of these larger time frame observations because the tools can be used on the larger time frames. Okay, so don't, again, if you like that kind of thing, don't discount it. All right, so again, how do we get to the 4-tick range chart? Hit the drop down box here, 4-tick range. Okay, now we're on the 4-tick range chart again. Okay, let's go to the indices. Here's again the ES chart. Okay, if we can get a little bit more price action toward the BBC, maybe we'll take some action there. Okay, the NASDAQ is trading sideways. Okay, you can see that's pretty easy and obvious. I'm going to take one quick look around to see if we can't do anything constructive. If not, then we'll call it quits a little early. All right, gold still sideways. All right, so to me it looks like we're just stuck. We're kind of sideways here for a little bit. So here's what we'll do. We'll cut it 10 minutes short, okay? Takeaways on this today are this. All right, number one, if you have a sheet of paper, the number one thing on your list should be, and you should be asking yourself this before you even push any buttons, is are we trending? So that's number one. Under that number one button, a good habit to get into is hitting the zoom out button or that red magnifying glass. So you should write that down. You do that, why? That's your next little thing underneath that. Okay. See larger landscape of the market, right? Are we trending? That's a good way of seeing if we're trending or not. Okay, that should be another thing on your piece of paper. Okay, couple more points, but hold on, I gotta move this guy's stop up. Yes, Ben, it's recorded. Go to YouTube and search CFRN Thursday. Okay, we pounded the thing about trending, right? Once you've identified the market is trending, then you're going to look for the bullish or bearish cross, right? That MA1 cross in the BBC. After the cross, your next habit will be, okay, engage the trend line, okay? Get in the habit of drawing trend lines. Whether they qualify or not, draw trend lines. What you write down underneath that point is why. Why? 2 reasons. Number 1, we don't know if it'll get to the BBC, which is the normal thing the market's supposed to do. And number 2, if the cycle turns color on you, right? If the cycle turns blue or red and it turns in the direction that it's not supposed to be, if it's the wrong color, okay, then that trend line's required, okay? And then what you want to write down too is, hey, if it's the wrong color, it's watering down the probabilities. Okay, so you should write that point down. All right. 3 disqualifiers, right? Number 1, the market's trading sideways. That's a big fat disqualifier. You're not going to push any buttons. Number 2, if you're faced with that cycle being the wrong color and pointing up at a 40 or against you at a 45-degree angle, okay, that's a disqualifier. And 3rd was the black step line, right? This black step line right here, piercing the BBC. That's the 3rd one. All right, that's a big no-no too. Stay out of the market. Usually when the market's trading sideways, okay, you'll get a lot of that. You'll get a lot of this, okay, at the wrong time, okay? So those are some of the takeaways, all right? Those are the biggest things, the traps that people fall into. They get into a market that's not trending, the cycle turns color on them, and it's the wrong color, okay? Those are bad habits that people get into. The other big one too is people will move their stop. What they end up doing is they'll get into a trade, they'll get stopped out, right? What the worst thing that happens is they get stopped out and then the market goes down in the direction it was supposed to, right? You're mad, frustrated, right? So the next time what you end up doing is instead of using 8 ticks, you're going to use 12 ticks or you're going to use 13 ticks. You start increasing your risk. So now your stop outs are double. Okay. This is a bad habit to get into, so just don't do it. If you get, one solution to that is if the trade's not easy and obvious, then just don't do it. Okay. If it's easy and obvious, then hey, if it's wrong, it's wrong. But everything was there. Okay. It's just the market was gonna do its thing. Okay. That does mean less trades. Yeah. Okay. So, anyways, that's a scoop. So every Thursday, okay, we're going to pound these same things over and over and over again. Okay. Until it kind of just registers and you have enough confidence where you guys could push the buttons on your own and get on the track. Okay, get off the bench and participate. All right. So again, this will be recorded. I'll get it on YouTube. Usually it's in the afternoon or the mornings, so it'll be there tomorrow for sure. All right. Sorry, the markets are lame. They're sideways. There wasn't really much to go over. Okay. But I did want to take that DOM. We did one thing in the DOM. So do I watch any order flow or book stuff as you do this? No, I don't. Like market profile stuff, no. I would say like there was an example in the room this morning. I think Michael was in a gold trade, and I pointed out, hey, there's about 125 contracts being bid at, I think 13.18 at the time. That, not to get into a long discussion about it, the market will gravitate toward those big tickets, those big orders. So gold, if you see 100 lot on a gold, that's, you take note of that. If you're on the S&P DOM, okay, if you see 1,000 lot laying out here, that should get your attention. Okay. So, yeah, that's it. Okay. Dwayne's really getting into, I have Logic up, Telegram up, and they are just light 71 conversations. I don't know what they're talking about. But anyways, all right. So that's it. All right. So be recorded. We'll talk next Thursday. Feel free to hang out, and we'll go from there.